in a few minutes or seconds. Alright, new stream should be live. Let's go quickly back on the channel and copy and paste the link into this one right here. I'm going to repost it in the Discord chat. Yeah, you can simply watch a stream on YouTube, You're My Liquidity. Awesome name, by the way. You're My Liquidity. Whenever you have a crush as a trader. You're my liquidity, darling. All I care about is liquidity. Oh, that's nice. All right, so let's get back to our 5-minute S&P 500 chart. Let's get rid of this daily order block. We're still continuing sideways. So now we formed a total range for the past almost 1.5 hours now. So we are 15 minutes away from a new hourly open. So if we check a hourly candle, buyers would still be bearish. We basically filled in this huge fair value gap here on an hourly chart. Very simple trade basically here on an hourly. The question would be, where am I actually going to enter here? Because entering down here, your stop loss would have been, or must have been, as big as, let's use a IDR high, 104 ticks here on a contract. This would be way too big unless you have enough money on your account. So what you could have done, you could have broken it down to a 15-minute time frame to reanalyze and look, okay, if I want to enter, I want to enter in a premium array. So our premium array would be considered above our 0.5 level of our IDR range right here, based on a 5-minute, for example. So right here is our entry level, or where we would consider to look for fair value gaps, take it short. Then we could have broken it down to a 5-minute time frame, where you would have seen, okay, here's our premium PD array from the 0.5 to our 1 level right here on our Fibonacci retracement. And because you watched a lot of ICT, a lot of old ICT videos, and the optimum trade entry level based on a Fibonacci retracement is a thing for you, and you would have seen this 5-minute fair value gap lining up perfectly with the optimum trade entry, would have been pretty much inevitable to take this short position right here. And we even got some more confluence. Oh, we broke our low. Beautiful. You got even some more confluence based on SMT divergence right here, where we formed a higher high on NASDAQ and a lower high on S&P and the E-mini Dow Jones, doing a little bit of a higher time frame analysis, which would have pretty much told you on an hourly chart that we are going to continue bearish after leaving behind such a massive fair value gap on the hourly. But now we want to watch and see what's happening here. Let's break it down to a 1 minute and see what happened intra-candle. So we left behind 2 fair value gaps here on the way back up into our order block here. Why is there so much stuff going on? What's this yellow? That's our hourly fair value gap. This is our volume imbalance. Okay, so we broke our most recent swing low. So we keep on dropping. We are below our overnight range 0.5 standard deviation, with our next target being, I'd say, 38.53 3/4 as our next major target, which would represent the overnight range full deviation, 1/4 standard deviation of our opening range right here. And it's also lining up perfectly with our 0.5 standard deviation of our RDR range. So there's basically just 2 ticks in between. YM was perfect. Let's have a look. Yeah, I think YM was the only one of those indices right here that actually went back inside this fair value gap. So all the other indices, they only touched, so let's say on S&P 500, like we drew it up here on this chart, this little breaker block, if we go back to a 5-minute time frame, or bearish order block, this only up close candle within this strong downtrend here, If we reached above the 50% level, which could have been a very nice entry opportunity. We will see what's going to happen if we are going to hit our next target, because if you would have entered right here, maybe on that 50% level, your stop loss could have been the beginning of this fair value gap, a 18 tick stop loss. Could have reduced it down to maybe a 15 tick stop loss, trading price to our 0.5 standard deviation for a 7 risk reward trade. And if it did not work out, you just keep doing the same thing over and over again. Your next entry could, for example, be somewhere inside this fair value gap or this volume inefficiency up here, or the optimum trade entry inside this 5-minute fair value gap. And you would have lost maybe 1 or 2 R before actually hitting your big winner. And that's just part of the game. So we broke our low. Let's see if we actually broke our low on our futures chart. Yep, there's no divergence between any of them. Be looking at this low already now. Beautiful. Now we're just getting a retracement, filling in basically that we don't leave behind a fair value gap. We would need a retracement all the way back up to 3867. Same here, just a little pullback before we perhaps continue further to the downside to reach our final target at negative 0.5. GBP USD should be, no, GBP USD is doing the opposite. Broke out of this downwards channel right here, walking its way back into those fair value gaps right here, around the 50% level of our IDR. USD JPY is now inside our 5-minute fair value gaps right here, further down and from this order block. Let's actually check this one here on a 5-minute time frame. So look at this. We had our RDR formed. Unfortunately, we did not watch this. Otherwise, I would have taken this trade with this close right here. But we had our RDR confirmed. We closed below our DR low here, consolidated perfectly within it. So that's a perfect example for the algo. Let me actually take a screenshot of that. That's interesting. All right, just wanna keep this. Let's break it down to a 1-minute time frame. That is price action at its finest. That's not bad at all. Consolidated within this range for basically the same amount of time we spent consolidating on ES. And now we drop inside those 2 5-minute fair value gaps right here, inside this higher time frame 15-minute order block. So if we look for a bullish reversal from a specific area, it would be this area. Otherwise, we would be looking forward to take out, nope, not here, but here, this sell side liquidity. Coiling back. Now we completely closed in this candle, which actually broke this low right here from 1035, leaving behind no fair value gap. Same on NASDAQ and pretty much the same on the E-mini Dow Jones. So now what we could be looking for is a continuation move to the downside right here. Paper trade, nope, I'm not connected anyway. So let's just wait and see. Very likely small fair value gap at lower DR on ES 5-minute. Let me have a look. Small fair value gap, you mean this one right here? Volume inefficiency, not volume inefficiency, but fair value gap. Well, could be a potential entry point, but it's too small for me. All right, so let's compare micro with, no, that's also the SP500, doesn't matter. All right, let's see if we can hit our take profit target. It's now 11:55, so we are 4 minutes away until our new candle is opening up, which also brings in new hourly volume. So let's wait and see what's happening with this new hourly open. If we are getting a momentum continuation into our negative 0.5 standard deviation down to 3853 and a quarter, or if we are going to use it as a tool to trap traders short into the market, to basically reverse price on them, to maybe fill in this volume inefficiency up here or one of those two fair value gaps for a higher risk reward opportunity down to our negative 0.5 target. All right, let's quickly see JPY. We got a initial reaction of this 5-minute fair value gap, rejected and continuing back up. GBP USD, not really interesting right now. Let's keep watching ES in a total overview with all other major indices. Let's quickly draw our Fibonacci extensions in here. Right here, from here to here. We're going to use the DR range template. So this is going to be our, come on, target right here, negative 0.5. From here all the way down to here, negative 0.5. And the same on US 30, Dow Jones. SP500 is currently leading this move to our target of a negative 0.5 standard deviation. ESH, come on. Here we go. GBP USD, let's actually close this chart. Let's watch how USD JPY is reacting off this higher time frame order block and the slower time frame fair value gap right around this order block. I'm actually going to take a quick break. I'm just going to mute myself for 1 or 2 minutes, going to the toilet. All right, I am back. Let's see if we continue hitting our target at this negative 0.5. The new hourly candle opened up right now. Let's watch and see. This is our lunchtime hourly candle. Gonna be interesting to see. All right, let me check the YouTube chat here. Who is actually in a trade based on this bearish order block right here that we identified earlier. I did not take the trade myself personally. All right. Come on, there's only a few ticks left from our low. Only 25 ticks or 24 ticks hit our take profit. To our take profit target. So let's wait and see for a potential 7 risk to reward trade. TheMas7er would love that. Right, we completely close in this potential fair value gap, or basically this fair value gap right here on a 5-minute time frame on USD JPY. Let's see if this could have been the bounce for a bullish reversal outside of this higher time frame order block and 5-minute fair value gap. Let's break it down to a 1 minute. We just closed in this whole fair value gap to the downside right here. Let's wait and see if we can break through all this consolidation. I am short from 3867. Let's have a look. 3867. 3867. That's pretty far down. From here. Oh yeah. Yeah, of course. This closing in of the fair value gap. There was a 1 minute fair value gap. Yeah, I'm sorry I did not check the 1 minute chart. I'm trying to stick to a 5-minute time frame here. Yeah, beautiful. 5-minute fair value gap. Filled in, closed inside 1, 2, 3 times. Bearish engulfing to the downside. Nice entry. We have another fair value gap that's left behind up here. Let's wait and see. If you entered on this 1 minute fair value gap, where's your stop loss? Where's your stop loss? I already took 2/3 floor plus 4. Nice. Great trade management. Based on this fair value gap. $26 tick move. What more do you want? A few full contracts, that's quite something. 5 minutes. Two-point stop, 3869. Nice trade. Nice trade. Nice execution and risk and trade management. Let's wait and see if we can hit a negative 0.5 deviation with the rest of your running position, or with that last contract that's running. All right. USD JPY completely filled in this bearish fair value gap right here. Let's see if this is going to be used to continue this move further to the downside. So this could be a potential entry short. Pretty similar to the entry that ACO Plan took here on SP500 in a 1 minute fair value gap right here. Has been filled in, continued further to the downside. Now we're starting to see some sort of up movement forming, but our overall target will still be the 0.5 standard deviation. So now our first 5-minute candle closed right here after the new hour, and it happened to be a bullish one. So let's wait and see. All right, so let's compare all 3 indices and see if any of, again, looks like all of them are continuing to go sideways, at least for a bit. All around our most recent swing low right here. here and here, right around this level. Mr. Zesty, if the stream is full, we're also streaming it on YouTube or restreaming it on YouTube. I'm going to copy the link for you and send it into the chat. All right, USD JPY. Beautiful pin bar confirmation right here. Let's wait and see. Do a little test trade with our stop loss, paper trade. Stop loss somewhere above the swing high, 2 ticks. I'll take profit target right here. See if it works out. All right, still going sideways. Lots of sideways action today. But of course, if you're going down a lower time frame than a 5-minute time frame, you might actually be able to enter in one of those 1-minute fair value gaps for a potential continuation to the negative 0.5 standard deviation. All right, so ES, USD JPY, what else could we be looking at? What would be interesting today? Let's have a look at Euro US dollar, since we also watched this chart yesterday during the live stream. Euro US dollar looks interesting. 5-minute time frame. So we pretty much did something very similar on a Euro US dollar chart. We also filled in, no, we did not hit this fair value gap, but I'm certain that we filled in this fair value gap right here, which also formed our DR IDR high right up here. Both of those fair value gaps are bearish, so we are going to color them in red right here. So this is a 500 fair value gap. We can afterwards break them down a little bit more. Our current low of the day would be, now our major sell side liquidity that's really standing out here would be right here at a price of, price label. This is our major sell side liquidity target. And right now we had a close below our DR IDR slow, which confirms our bias bearish. Right here. And we actually just filled in a 5-minute fair value gap right here, from which we could see this thing continue further to the downside. So I'm going to place a stop loss right around the IDR slow, a little bit above it. Let's use this wick right here for our take profit target right here at this sell side liquidity target. Below this double bottom right here, those relative equal lows from yesterday's New York session. This could be an interesting play. Any other fair value gaps that we left behind? Let's actually quickly measure that move as well. So a negative 0.5 standard deviation has already been hit. But our major sell side liquidity target, I'd say, would at least be this one here. Pretty similar to what we had on the previous day, where we also had relative equal lows that have been taken out, putting in place 2 new relative equal lows. So let's wait and see what's happening on Euro US dollar right here. So we also have a fair value gap right around the optimum trade entry. And we have another fair value gap that we actually, hang on, let the chart reload quickly. Another fair value gap right here. This is an old fair value gap, so I'm gonna leave this one open. This has already been filled in. All right, and we closed below our DR range and we pulled back into this fair value gap, so this could have been a potential entry short, pretty similar to what we saw on US 30 with our stop loss maybe at the 50% level, our take profit target at a 0.5 negative deviation, or the sell side liquidity for a little bit higher risk to reward right here, also around the optimum trade entry. So if we extend this out, our -1 deviation from our overnight range is pretty much matching up with our Euro US dollar quick analysis. Let's go back to our charts. And again, we're going sideways. Let's check the 1 minute time frame and look for fair value gaps to potentially enter short on. All right. Yep, continuing sideways on all of them, but we are very likely. So on a 5 minute time frame, we'll also be looking at on those fair value gaps that we just left behind right here. This one here, right around our DR IDR slow, for a potential continuation to our final take profit target. We have a small fair value gap left behind here on a 5 minute time frame on the SP 500. But maybe if we check the 1 minute time frame, we are going to see some more opportunities to enter short on. Usually I hate being stuck in this sideways movement. I tend to avoid it as best as I can, but sometimes you just can't get around it. Wait and see. This is this fair value gap. Ecobos entered short on. Let's wait and see. Euro US dollar already hit our target, so this would have been a very nice setup today. I wonder if we can add alerts on the DR IDRs. Okay, in TradingView. I'm doing it via the FIB tool, the master himself, or maybe I code something for myself. But the FIB tool should be working well enough. I started to work on some version of a similar indicator. Let's use it on... Come on, my internet connection is really killing me here. I worked on a indicator myself. This would be the 88, my scripts. I think this one right here, where I actually where do we have it? Right here, this is part of my indicator. If we get rid of everything here quickly and the DR IDR, this is what I sort of created, where it already automatically plots all the deviations on here, and also is not extending it out all the time, so you can keep a very clean chart without too many lines interfering with everything. You just get those major levels. So for example, the 0.5 standard deviation, your 50% level, your open, high, low, close. Let's go to a 5 minute chart. Maybe we see it a little bit better. But as of right now, I have not been using this indicator myself. Or share screen. Yes, no problems. I can share those settings. Let's quick 1 minute time frame. This is this fair value gap we've been talking about. Let's bring it back to a 5 minute. So basically the settings I'm using, there are multiple ways. So what we need is the 0.5 level for our midpoint. You can color this basically in every color you want. The 0.708 would be the optimum trade entry right here, which is colored in red. And then starting from there, I have the negative 0.5, the negative 1, the negative 1.5, 2, 2.5, 3, and you can keep going on like this. And for example, what I saw the master do is that he uses something very similar, that +2 plus positive 2.5, positive 3, positive 3.5, and positive 4. And now we should be able to basically have both deviations on the opposite side. So if we turn on our main levels again right here at 1 and 0, and we get rid of all our drawings. Okay, if I get rid of all my drawings, everything else disappears as well. Let's go over to a... come on, why do the charts always have to be so messy? Maybe if we go over to this chart, let's say our opening range starts from here to here. Now we would have deviations in both directions, basically, with our optimum trade entry. You can simply, if you want to save it, for example, you click on here, template, and then you click on save as. You call it DR range up and down, or bull bear, or whatever you want to call it. And now you have the DR range extended to both directions, basically. Or you just use a simple version like this one here, depending on how you draw it. So if you're drawing it from the low to the high, basically looking for longs, and if you're drawing it from the high down to the low, you're looking for shorts, and then the deviations are only pointed into one direction. I hope that made a little bit of sense. Let's go over to NASDAQ, and we're starting to pull back right here. Did we get some divergence? Right here on the S&P, we did not make a lower low right here, but on NASDAQ and the US 30, we formed a lower low for a potential move back into those highs. How long did it take you to get over impulsive trading decisions? I feel like I'm getting some good trades, but they're still being counteracted by impulsive, not thought out ones. By starting to basically journal my trades, because if you take a lot of impulsive trading decisions, you have lots of work actually to do to basically fill out your trading journal, and it starts to become a little bit annoying if you, for example, have a column for reasons why you entered into this position, and you basically have to look for a reason, or I don't know, make a reason up, because there pretty much was no hang on, I'm going to show it to you again. Where did we have it? So we had this one right here. Come on. DR range, yeah. Is YouTube Live stuck in a loop again? That's annoying. I'm not going to reset that shitty stream one more time. I have to get going anyway soon. Unfortunately, we've been stuck in this hour-long consolidation with another continuation to the downside. We're back in this 1 minute fair value gap, so we're still waiting to see. At least you've got everything on your chart. We have a little volume imbalance right here. Let's say ICT's optimum trade entry right around this, or right inside this fair value gap here on the M5. Our bias is confirmed bearish. Just retested this 1 minute fair value gap. Looking forward to target a full negative deviation of our overnight range and a negative 0.5 deviation of our RDR, or New York Steelers range. Perfect. Unfortunately, YouTube stream is not working today. Anyway, yesterday was, look at this reaction of this 1 minute fair value gap. Went back inside and actually closed inside now. This might be it for a take profit target hit at our 0.5. All right. Let's see if this 1 minute fair value gap holds to be true. We're starting to pick up a little bit with volume right here. Let's compare our indices. Yeah, all relatively looking the same right now, with this divergence right here. Low time frame divergence. I'd say this divergence is not as significant as, for example, this major divergence at also a very specific time, where we, for example, had our high right here at 2 a.m. compared to our high here at 950, 945. So 15 minutes into the New York stock market open, where we basically had this huge divergence on Nasdaq, confirming a possible entry short right here around this, inside this fair value gap on the S&P or E-mini Dow Jones. Of course, also on Nasdaq, because you could have seen, okay, we have this divergence forming right here, and we have some sort of confirmation already, maybe on the M1 time frame, entering short on Nasdaq, because Nasdaq is the one that's sitting up high for a better move to the downside of the negative 0.5 standard deviation of the overnight range. All right, Euro US dollar came back inside of our DR range, now forming a bearish engulfing candlestick. Let's see the reaction of that. Still looking forward to take out this equal low sell side liquidity. I'd say we are going to take it out today. If not, we might even be gapping below it next week in case we're closing this week bearish. All right. Making it back into the fair value gap. Had a beautiful pin bar here on the M5, potentially forming a low around here, potentially. All right. Potential reversal opportunity at the current low of the day. Because yesterday we also did not get those IDR reversal opportunities during the New York kill zone, basically, at least. We got them eventually in our overnight range here. A beautiful optimum trade entry pullback right here. Bam, continuation lower. We have to wait and see, because it's pretty much very similar price action. We had this massive drop. We consolidated, continued going lower, but we did not hit our 0.5 standard deviation before we eventually made our way back up into our overnight range premium PDRA around our optimum trade entry to enter short into the market, continuation lower. So those two, I'd say, breakouts of our DR IDR range are very similar as of right now. We also consolidated for quite some time, continued breaking lower, went back into consolidation again, filling in bearish fair value gap after bearish fair value gap, making another lower low for a third time before then actually reversing price up higher, up higher, up higher, filling in some of those fair value gaps, taking out equal low sell side liquidity. I hope you guys can see that right here. This is what I'm talking about, equal low sell side liquidity right here. Taking that out, using it as a catalyst to boost it up into our premium PDRA to pump and dump price back down. So very, very similar price action as of right now. We found a new fair value gap that is almost confirmed with a pin hammer right here, from which we could be looking forward to take some shorts. Euro US dollar still moving. All right. Are there any more questions you'd like me to answer? Because I'm finished with trading for today. I'm not looking forward to place any new positions. I have to take my dog for a walk very soon, and I would end up the stream within the next 5 or 10 minutes, rather 5 minutes. And yeah, if you have any questions or like me to analyze something, I can do that right now. No worries, you're welcome. I also learn a lot while doing those live streams. That's why I enjoy doing it. Between the -1 standard deviation of our overnight range right here, if we enable it again, and our RDR range, similar to what we are having right here during the IDR where we formed this bearish order block that we just wicked inside of, or also closed inside of, for a continuation lower, making a new lower low. And after we formed this new lower low, we pulled back into a internet lag, basically. All right, come on. So the similarities are different, obviously there. And then we formed a new lower low. So everything that's missing right now would be another lower low that we need to see formed somewhere down here for a continuation move to the upside to maybe fill in one of those fair value gaps right around those areas. Let me get rid of that actually. Inside one of those fair value gaps right around 3904.50, which also contains the optimum trade entry right inside, and also our opening price or our open point of our DR IDR range on a 500 time frame. We also have another fair value gap to look at, which is unfortunately not in a premium PD array. It's in discount basically. And we could be looking forward to, I don't know, reverse back into for a, I'd say, late PM New York session reversal to the downside. Yeah. I kind of wish you would stream unendingly. Yeah, unfortunately, I can't do that today because I still have to pack my things for my ski holiday trip starting tomorrow. So I'm not going to be streaming Monday and Tuesday. I'm starting Wednesday, I think, again. And yeah, so I'm excited for the ski trip. I mean, it's December already. Most traders don't even trade during December because of some, I don't know, some reasons, because apparently the market doesn't move enough or something. I think we can all agree that yesterday and the day before during CPI and FOMC, we had some great trading opportunities with the Masters, DR, IDR range. So I'm still ready to trade during December. Of course, not during bank holidays and all that stuff, but it's the festive season, so taking a few days off can't hurt no one. Especially since I hit my goal for this whole year, because last year or beginning of this year, I started to have a goal to compound 1% profit per day. And as of today, I achieved that goal. I just went through my Excel spreadsheet where I kept track of all my profits on a daily basis. And as long as I kept, on average, compounding 1% per day, yeah, I made some decent multipliers on my trading account. You can type it in yourself, go on Google and look for a daily compounding calculator and type in 1% daily profit over the course of a whole year, and only trade on it. Also only select only weekdays, so only 260 or 265 weekdays per year. And yeah, check it out. That also convinced me that 1% per day is enough. You can also do the math using your calculator and adding it up, because I calculated once after lots of losing trades and stuff like that. I needed something to, I don't know, give me some hope again. And then I don't know why I never thought of like daily compounding or daily interest and stuff like that before. I don't know, maybe it was just too simple for myself. But once I started actually calculating this 1% daily compounded over the course of a whole year, starting from a 5 grand account, I would reach a 100 grand account within 16 months by compounding 1% per day. And yeah, that convinced me to focus on that goal, and it's also going to be my goal for the next year. I think within my first 10 years of my trading journey, achieving 1% per day on average over the whole year is going to be enough. I think later on during my journey, I will hit those insane risk reward trades similar to the master. And yeah, I think you have to learn how to walk before you're able to run, or run a marathon or something like that. So daily compounding, it was for me, which actually turned my trading around and made it a lot more fun. All right, guys, take care. I'm going to end the stream now. I will be back next Wednesday, so trade safe, and I will see you next time.